God damn it, an entire generation pumping gas, waiting tables, slaves with white collars. Advertising has us chasing cars and clothes, working jobs we hate so we can buy shit we don't need. We're the middle children of history, man. No purpose or place. We have no great war. Our great war is a spiritual war. Our Great Depression is our lives. We've all been raised on television to believe that one day we'd all be millionaires and movie gods and rock stars, but we won't. We're slowly learning that fact. I'm very, very pissed off.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitated, never replicated. How do you guys like the shirt? This is a throwback, Ocean Pacific. I got this in high school in the mid-90s. Probably wore it to a dozen high school pool parties. That was back when our music selection was limited to Sublime on repeat. Guys, if you're a new sub to the channel, definitely check out the last few videos. I've been going over a lot of recessionary indicators, and I think it'll be really useful information. We had over 1,000 new subs in the last couple of weeks, so check out those videos because I want to share new information with you today. One thing I want to talk about in the video, guys, I'm going to show you in the charts is the market geometry. Many of you know watching this channel, I trade heavily in Fibonacci. I want to show you how you can predict these markets with Fibonacci for these blow-off tops that is incoming with the September 18th rate cut. But I also want to talk about another indicator in the marketplace that has predicted every single market crash going back to 1929. Lee, throw up the Shiller PE chart. All right. So on the Shiller PE chart, Lee, go ahead and give me a horizontal line across 30. You see this red line, guys? Every time the Shiller PE ratios is a valuation of the marketplace, every time it has been above 30, you have had a market crash. Lee, highlight where we are right now. 36.43 above 30. What about 2021? Lee, highlight 2021. We got up to 38.58, guys. As you know, I've been long predicting we will take out that 38.58 with our blow off top. And you may say, well, Brendan, 2021, was it really a market crash? Well, let's go over the numbers, guys. Bitcoin fell 70% from its November 2021 top. The S&P fell 28%. And the Nasdaq fell 38%. So yeah, it was a very big move in the market. Lee, highlight.com 2000. That was the most expensive market according to the Shiller PE in stock market history, 44.19. What happened in .com? In .com, the S&P fell exactly 50%. Charles Dow wrote about this, the natural halving and doubling in the marketplace, but the Nasdaq got brutalized and fell more than 80%. Amazon fell 93%. Go back to 1929, Lee. 1929, barely above 30, 31.48. And what happened in 1929? You did not make a new all-time high in the market until the early 1950s. 80% loss in the marketplace. So the Shiller PE has captured all of these moves. And I want you guys to understand this. This channel is about market history. This channel is explaining to you what has historically happened utilizing indicators that have been 100% accurate since the 1929 crash or since specifically World War II. The Shiller PE is just another example of this. And we're going to look at targets for this blow off top because I think you guys are going to find this really fascinating here in the charts. So remember, guys, what's happening right now, people love to talk about manipulation in the marketplace, right? They want to tell you about manipulation, especially TA people. They love to talk about, well, they're going to pump this and it's a bear trap, it's a bull trap. Guys, I've long said this. There was true manipulation in the market back in the 1920s and before the 1930s. JFK's father, our president that was assassinated, Joe Kennedy, was a famous market manipulator. Here's a nice little clip from Boardwalk Empire. I've showed this before. I want you guys to see it. It says Joe Kennedy meeting with a notorious gangster, Nucky Thompson.
You have a gambler's spirit, Joe. Gambling implies risk. I take the risk out of it.
How do you manage that?
By rigging the game, of course. What else is the stock market good for?
Back then, Joe Kennedy did a lot of things like call the New York Times and tell them that Ford was going on a strike. He would short the stock. They would write an article or headline, Ford workers go on strike. The stock drops. Then he would buy the stock at the bottom. When they realized it was a fake story, it would go back up. That was direct manipulation. The manipulation that happens now is not in smoke-filled, cloudy rooms with all these hedge fund billionaires in Wall Street talking to each other. I'm sure a little of that happens, but the manipulation that happens now is right in front of your face. It's your government lying to you about the economy. It is the media, CNBC, Bloomberg, parading on all the Wall Street salesmen telling you how strong the economy is. Yet when every single recessionary indicator is flashing deep red, you will get the recession, the yield curve inversion, the unemployment. We've been over unemployment ad nauseum, but just for one more time, Lee, throw up the Bank of America unemployment chart. Every time the SOM rule has triggered since 1953, including now, you have already been in a recession. Has anybody told you that metric? That you've already been in a recession, meaning we are in a recession now. And on the latest surveys, 2 out of 3 Americans say that we are in a recession. Yet when you turn on the business news, you listen to the Fed, no recessionary forecast, you listen to the government, brilliant, strong economy, the best economy ever. Yet the person on the street understands what's happening. Remember, the Fed has a dual mandate. The dual mandate of the Fed, do you want to know what the true mandate is? I'll tell you what Jerome Powell says the dual mandate is. Stable prices and stable unemployment, right? That's what Jerome Powell will tell you the dual mandate is. The true dual mandate of the Fed, and has been this way since 1913, is to protect the top 1% and protect the stock market. And how do I come up with that? The top 1% owns 54% of all equities in existence. The top 1% owns 54% of all equities. The top 10% owns 93% of all equities. Just think about that. That is the wealthiest people in the country, and that Jerome Powell will always move. Every Fed will always move to protect the market. This is why they allowed inflation to get up to 9% and raised rates, and they brag about how quick their rate hike cycle was. They allowed inflation to get up to 9%. It increased the cost of everything, embedded inflation. And what does the media report on? The rate of change. Inflation's only up 2.6%. That's really good year over year. They don't talk about groceries being up 30%. They don't talk about housing being the most expensive and most unaffordable in U.S. history. They don't talk about building materials being up. They don't talk about all the embedded inflation and everything that you pay for that you need to live. Why? Because that number would piss a lot of people off. So they focus on the rate of change. Inflation is compounding. Lee, throw up Trueflation. You have lost more than 20% of your purchasing power since 2020 when they started printing all of the money. Jerome Powell likes to fancy himself. After Paul Volcker, he was bragging about having Paul Volcker's book on his desk. Paul Volcker went in front of Congress and said, "You want me to fight inflation? Stop spending money. You can't fight me on inflation. You're spending too much money." The core problem is modern government, modern economists. The more degrees they have, the dumber they are, it seems to be. The Fed has 600 PhD economists, not one recessionary prediction. They don't understand what causes inflation, which is printing money. And our country has $35 trillion in debt. That means every single U.S. citizen owes $100,000 towards the debt. Absolutely crazy. Lee, throw up that chart. Absolutely crazy, guys. Look how it has spiked up since 2020. And you need to understand this because this all brings liquidity to the marketplace. So Powell didn't choke the market off enough. We have this elongated cycle, but a lot of people are saying, well, can't we just keep going up? They'll just keep printing money. You can't stop the cycle, and unemployment's going to be your key indicator to watch, and it's a lagging indicator. So what we can do is use market mathematics, Fibonacci, to look at these targets, these proportional moves in the marketplace, to understand where price could get to and to look for our trades. Guys, if you like this content, be sure to like and subscribe. I really appreciate you guys supporting the channel. I always reply to your comments. And without further ado, Lee, let's start the show. All right. Let's talk about some market mathematics, market geometry. I fondly refer to it as. Guys, a couple of things. First thing I'm going to look at here, look at your top you made in January 3rd, 2022. This is the S&P futures on my screen. We're going to take a Fibonacci retracement from that top to your cycle low so far, and look where you're struggling. The 1618, 5615 price right now, and futures 5661. We know, I believe there's another leg coming up. And what I'm looking for, and you can see this candle, depending how you look at this candle on a weekly basis, this looks like a hanging man candle. On a daily basis, it looks very bullish. But when we're looking for this type of pattern, I still want to see some type of pullback. I think it'll be healthier. And then your ignition to the upside. And when you look at those targets, we'll look at this on the daily time frame, but my 5,900 to 6,100 target. This is a doubling of that trading range. A 200% move would take you to 6,100. That's my target for the blow off top in confluence with the September 18th rate cut. Now that's the S&P. Let's do this same methodology on the Nasdaq futures, and then we'll go international and we'll look at Bitcoin with it as well. Now, the Nasdaq ticked off a lot of boxes of market geometry. You have Charles Dow's doubling in the marketplace, a 100% move off the low. 10,484 down here on the low, went up to almost 21,000, a 100% move in the marketplace. Let's look at the market geometry here. Let's grab a fib from our high in November 22nd, 2021, down to your cycle low so far. Look at the 1618. 20,650. Where did your Nasdaq fail here in futures? You did not get a close on a weekly basis above 20,650. And had you known about market geometry, had you looked at this and zoomed in to find a pattern to trade, a 17% decline from hitting the 1618. Again, what is the Nasdaq doing? Exactly what we want to see. We'll zoom in to the GFC cycle and to the current cycle to look at the W pattern the Nasdaq is putting in place here. If we look at our upside targets on the Nasdaq, if we were to hit the 200% expansion ratio, you're looking at 23,000 on the Nasdaq. What percentage is that away? Well, off that recent cycle low there, it's a 32% move. Can it get there? That's why we got to zoom into the daily time frame to see what other targets we have. That is a big target, 23,000. Is it possible? Guys, the market's going to be very euphoric with the rate cut. So we're going to look at it zoomed in. Let's go international. Market geometry. What about the DAX? The German DAX, this is 40 companies, right? NVIDIA, one stock, is more valuable than the German DAX. Did the German DAX adhere to Fibonacci? Let's look at your high, November 15th, 2021. Let's pull the Fib retracement to your cycle low. Look at your 1618, 19,057. Look at the DAX. It took 3 years for the S&P to hit its target. 3 years for the Nasdaq to hit its target. 3 years for the DAX to hit the target. It hit the expansionary target. This is the key takeaway. I want you guys to understand the market mathematics. What about if we look at Bitcoin? Because Bitcoin's hyper parabolic, right? So we look at Bitcoin, guys. We're going to do the same method. You topped in November with the DAX, with the Russell, and with the Nasdaq, okay? Let's pull a Fib retracement down to your cycle low down there at 15.5, and you can see you came up above the 1 Fib at 69K. You have not even come to the 1272 yet, which is 83.5. Remember, I have my mid-80s target. And of course, if we get our higher level target, look at your 1618. 102,000. Now, utilizing this current trading range, as you guys have seen me do many times with Fibonacci, coming up to our all-time high of 73, down to your retracement level low, we can look at the 200% move, which is at 98,755. And I've been saying if we get up to 98, I expect a wick to 100K, key psychological number. You can see our mid-80s targets here, 80K target, 83.5. Bitcoin is extremely parabolic. All of you that trade Bitcoin already know this. So I'm looking at Bitcoin as levels. You have to take out 73, then you're coming to the mid 80s. Okay. And we're going to see how Bitcoin reacts there in confluence with what the markets are doing. Now, if we go ahead and bring this to the cycle perspective, 2007, you guys have seen me do this many times, exact same Fed funds rate in 2007 on the left. On the right, 2024, 5.25%, and 2024 as well. I made this really simple for you guys. We have the July 16th high in the S&P futures in 2007, the exact same high we got in 2024, the exact same retracement played out the exact same way, identical to our target of 5120, hit it to the penny in the 2024 market. And here's the difference. In 2007, the S&P stayed below the 50. So here's your Jackson Hole event right here, August 30th. This is the block you were in right or back in 2007. You stayed below the 50. You exploded with the September 18th rate cut, a 15% move off your low, right? That's where you exploded. Here in the current market, here's your Jackson Hole event, the white line. That was August 22nd, and you're staying above the 50. September 18th rate cut is the exact same day, identical day. The market has priced in like a 93% chance of a quarter point cut. I can tell you in 2007, we got 50 basis points for the first cut. And in .com, we got 50 basis points for the first cut. I think you're going to get 50 basis points once again. We shall see. The market's only predicting a 33% chance for that, but we shall see how that plays out, guys. So you're tracking identical to the pattern. You're showing more strength than you did in 2007, staying above the 50. But that's why this is really key to watch, because I still would like to see that pullback and then the explosion up. Stretch the rubber band back and the modern market to explode to the upside. What about the Nasdaq? The Nasdaq's tracking even cleaner. Look at the Nasdaq. You had your sell-off, right? Just like you did in 2007 here on the left, 2024 on the right. There's your sell-off. And where are we now? Here's your 50. Remember, we're in this box between Jackson Hole and the September 18th rate cut. Look what the Nasdaq did. Got up above the 50, fell back below the 50, got back up above the 50, back tested it, exploded with the September 18th rate cut, a 15% rally from the rate cut day. Look what the Nasdaq's doing now. Got above the 50, fell back below the 50. Looks like it wants to get back above the 50 again and maybe try to hold it. September 18th is coming up. I told you we're going to have chop in this box between Jackson Hole and September 18th. And then I expect an explosion with September 18th. We'll look at this zoomed in on the daily as well. Tracking identical, even more so than the S&P, tracking identical to 2007 with the exact same market movements, oscillating, vacillating back and forth on the 50 moving average. What does this mean for the S&P on our larger pattern? We had a 15% rally off the 2007 low before our blow off top, 15.4 to be exact. Here we have a 15.25 rally off of this previous leg. And again, if we do a geometric move here, if we do a 1-for-1, form a signal wave, looking at another 15.25%, that takes us up to 5,900 and again, 6,100. So 5,900 to 6,100 is my range I'm looking for. And I'm looking for that market top in the S&P in October. October 11th was the exact topping day in the GFC cycle. If we look at this from an ABC perspective, so for any of you Elliott Wave traders that like to look at this, you can simply look at it from this perspective. This is an equidistant move to your 5,900. Bingo, just like that. Okay. So let's go ahead and keep going forward. Looking at this on the daily chart, again, the key thing you guys want to watch, September 18th rate cut. We just had Jackson Hole. And you can see what the S&P is doing. It's confusing a lot of people, right? I watched a couple of YouTube guys. I got a bunch of thumbnails. Members in the Discord were sharing some as well, some clips and edits. It's confusing a lot of people. The key thing to understand here is, could we be front running the rally? In other words, could we be front running the rate cut rally? Well, that will happen if we start making some steps here. You have to take out 56.69, and the key level to take out is 57.21, your all-time high. If you can get above 57.21 before September 18th, you're front running the rate cut rally, meaning your explosive move may be happening before the rate cut rally. So you're going to have less of a move post the rate cut. You may even have a decline, but so far we haven't done this yet in the S&P. Now the Dow did it. The Dow made a new all-time high. The Nasdaq's behaving exactly as it did in 07. The S&P, this is a canary in the coal mine to see if we can break out, get above our all-time high before the rate cut. If not, guys, again, what I would like to see is this to pull back, because we have this beautiful W pattern that formed. I'd like to see a pullback in confluence with September 18th, and then the launch with September 18th rate cut, forming that beautiful W pattern, okay? So you want to watch these two levels. Obviously, your 50 on your downside is a key level to watch, right around 5,550, okay? That's what you want to watch on the S&P. This week, Wall Street is back. Last week, a lot of Wall Street's on vacation. I'm recording this Saturday for you guys to post this Sunday morning. But Wall Street, we have a 3-day weekend here in the US. A lot of traders take time off this past week. Volume was very low. You guys saw the whipsaws in the market, 50, 100 points back and forth on the S&P futures. 56.69, need to get above that, stay above it, and take out the all-time high, 57.21. If not, again, I showed you on a weekly, you basically have a hanging man candle. I showed you that on the weekly. If not, you could be revisiting this area, maybe even pulling back stronger, which is something I personally would like to see the market do, because again, stretch the rubber band, reset the oscillators for a breakout to the upside. We look at this on NQ. Again, this is just behaving absolutely beautiful. I show you guys this illustration all the time, looking at your W pattern here in the marketplace. If we can come down even more, that's even better. Really stretch the rubber band. But if you behave just like you did, right? Just like you did in GFC, then this is going to be chopping around the 50 moving average, above, below, until September 18th. You get that rate cut move September 18th. Then I'm looking for the Nasdaq to break out. Now, a lot of people are asking me, do I think the Nasdaq will make a new all-time high? I personally do. I know a lot of people think, nope, it's too weak. It's going to make a lower high. If it was to make a lower high, let's just pull a fib on this, right? Let's just pick a date out here. Let's say this thing tops out, somewhere around mid-October. What did we top out in 2021? I think November 1st, I think somewhere around there. So let's just go out to late October, right? So if the NASDAQ was already topped, let's just pull a fib from your all-time high down to your low. Let's get some fib levels. Really want to look at the 786, 886, 618 here. Looking at this level, you could have something like this, right? If the NASDAQ already topped out, then you're looking at 20,200, 20,569. I think it's breaking out to the upside. Talked about these targets, 21,971 based on the current pattern. There's that 23 number, 23,228 for the 1618, okay? I think retail and big money, big dumb money is going to pile in back into growth. You look at Apple, you look at all these, look at Apple, look at Tesla, look at NVIDIA. They've been throwing bearish patterns. They're struggling. You get the rate cut. It's going to be good for growth. I think you get that explosive move. So I think we make a new all-time high. First level is 21,971, then 23,228. And what were these levels? 23,050. Back from your November 21 high down to your cycle low is a 200% doubling, okay? Doubling of that range. So 23, I still think is very realistic for the marketplace. So we'll see if we can get there. That's what I'll be watching here on the NASDAQ in confluence with that September 18th rate cut, guys. Go ahead and keep moving forward. DAX is right at its all-time high of 19,020. When you look at the DAX, I mean, Lee and I were talking about this the other day. By the way, guys, it was Lee's birthday the other day. So he just turned 26, little baby boy. Be sure to say happy birthday in the comments. But when you look at look at this, look at the move. I mean, this is crazy, right? So could the DAX just keep going up, right? If we pull a fib from your all-time high to your retracement low, you can see you're right at that 100%. My targets on the DAX are 19,540 and 20,200, right? So you have this confluence, but could it just keep going up? Sure. When you start looking at the DAX, it is maxed out on the money flow, right? It could keep going sideways like this and just keep barreling up, but it makes more sense logically for my engineering brain to get a pullback, to reset your oscillators, to chop around and confluence with September 18th, break out, and then go to the upside. So I'm looking at that across these indices that are really pumping, such as the Dow, the DAX, because this is really interesting, but it's a very strong move. Look at this, a 10% move straight up. No sideways price action, no accumulation, no pause, no break, just straight up. Could it keep going? It could, but I think it's healthier to get a pullback, to consolidate until September 18th, then break out to your 19,540 target. That's what I want to be looking at here on the DAX. If we go forward, let's go ahead and look at some cryptos. Looking at Bitcoin, guys. Again, looking at these targets, just to pull this again for you, this is an ultimate pattern I think will end up playing out here in Bitcoin. We look at our targets here on Bitcoin, we go down 1618, 102,088, 3 peaks and a domed house. This is also a law of 3 pattern, peak 1, peak 2, peak 3. A lot of people are freaking out about this pattern, how bearish it looks, whatever. Look, my thesis on Bitcoin, guys, and again, I could totally be wrong. I don't think I will be, but I could totally be wrong. I don't see how the S&P, the Nasdaq break out to new all-time highs and Bitcoin goes down. Bitcoin typically moves at a 2 beta to the tech space. If you got international markets like the DAX, you have international markets like the Aussie index, you have domestic markets like the Dow already making a new all-time high, the S&P just a handful of points away from a new all-time high, the Nasdaq making that beautiful W pattern. We have market history of a breakout based on the rate cut. That's what I'm looking for. So I see Bitcoin going up, and I think you're going to at least get to these 80s targets. And if it really goes parabolic, I'm looking for that 100,000 target, guys. And ultimately, you're going to build some type of top, a double top, a head and shoulders like that's on the screen here for the dome house. And that's your market move. And then the recession sets in, and then the sell-off sets in, and then people are in disbelief and they want to buy all the pullbacks, and they're going to get fed all the BS news until the big moves in the market really start to collapse the market. And this is just a normal market cycle. Again, this is a third time in 24 years we've had markets like this, but every time it happens, people are shocked, surprised, black swan this, black swan that. They never see the writing on the wall till it's too late. That's why this is tomorrow's TA today. This is what I'm looking at right now in Bitcoin. You're at 58.9. Let's look at this zoomed in on the daily chart. Again, I've denoted here the most important days, September 18th. Bitcoin did not exist in these 2 previous rate cutting cycles, specifically for the GFC as well as .com. But again, Bitcoin is going to behave as the NASDAQ behaves, and getting up, according to this, closer to your all-time high up here at 73,843 is your first step. And you're doing the steps you need to do to hold your range. You put in your low directly at the target that I had predicted we would get to, right? You have your higher low structure still holding up. The NASDAQ is trying to push back above the 50. You may see Bitcoin try to push back above the 50, or Bitcoin can just chop here, guys, until September 18th. When the markets start taking off, look for Bitcoin to break out. It doesn't matter if Bitcoin takes off later or takes off earlier. The beta is so high on Bitcoin, it goes parabolic when it moves. What I'm more concerned with is just watching it hold these levels, right? Watching it, see if it can stay above 56. And as I've said before, I really want to see it stay above 54. The chop, the downward slope, does not bother me, this downward descending channel, because I think the markets are going to break out. Now, if the S&P front runs, right, if we start breaking out to a new all-time high before the rate cut, I still think you're going to see Bitcoin break out because at that point, the Nasdaq is getting stronger. S&P makes a new all-time high. Dow made a new all-time high. I think you're going to see it move up, but perhaps it only gets up into the 80s versus my 100K target. So we don't know what we don't know yet, which is why this week and next week before the rate cut are very important to watch across all the market assets. What I can tell you based on market history, Bitcoin will move with the Nasdaq. They both topped in November 2021, and it moves at a 2 beta typically. Again, Bitcoin fell 70% in 2022. Nasdaq fell 38%. What about Solana? Just do a quick health check on Solana. Going sideways just like Bitcoin, guys. You can see you have your fractal support here. You put in a little bit of a low. Your 50 is where you want to get above eventually. It's right around 155. You're struggling right at 161. But ultimately, whenever you are going sideways, I say this over and over because everybody on YouTube all of a sudden is a Wyckoff expert, and none of them actually read Wyckoff's work. That's how the TA space works. But whenever you're going sideways, guys, you're always in accumulation or distribution. It's not definitely this one or definitely that one. There's steps you have to do to show which one you are in. If you start losing your lows and breaking down below your lows, let's just pick a nice low here. You start breaking down below these deeper moves here in the market, 120, you start getting below 120, you take out this down thrust low. Okay, you're in distribution. You broke down. When you start moving back to the upside and taking out these fractal highs of 193, 200, 210, you are in accumulation, breaking out to the upside. Going sideways does not tell you where you are, which is why you have to back up, zoom out, and look at the broader market cycle. And I believe with the rate cut based on market history, risk assets will rally. Guys, hope you enjoyed the video. Again, be sure to like and subscribe. Check out our Discord. Check out the exchanges. All that information is in the video description. I'll see you on the next update. Take care, everybody.